A lot has happened since the last episode of the Bitcoin Bulletin Podcast. We have officially entered Uptober. We dodged a bullet here where I am in Florida, but many in other parts of the Southeast were not so lucky. So our thoughts and prayers go out to the thousands of you devastated by Hurricane Helene. And it looks like we're geared up for another round of Here We Go Again. This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy. Guten Tag, Buenos dias, Morian, and welcome to episode 182 of the Bitcoin Bulletin Podcast. Bitcoin remains on sale as we await this halving cycle's epic face-melting bull run. While there are many who are convinced that we may have already peaked, I would remind you once again that I have said repeatedly, episode after episode, that we are still early. In fact, in episode 170 back in July, I emphasized that, for example, in 2017, we didn't retake the previous cycle's all-time high until 7 months after the halving day, which in this case would translate into the end of November of this year, and that in general, we don't see that happen for anywhere between 6 months to a full year after the halving. So we are still early, despite the pump prior to the halving day. That was the anomaly. That's what was different this time. For example, in episode 178, which was about a month ago, I brought the receipts and I laid out the data to show that if this had been a normal halving cycle, had it not been for that premature pump because of the spot Bitcoin ETF approval, we would still be in a range of anywhere from between around 43,000 to 54,000 or so. And that as far as the cycle top is concerned, in each previous cycle, the all-time high occurred 1 year to 18 months after the halving day, which in this case would be somewhere between April and November of 2025. So if you have your panties in a bunch thinking that the cycle wasn't going to happen this year or that we've already peaked, buckle up because you ain't seen nothing yet. In March of 2014, Newsweek gave us infinite meme-worthy material when they wrongly claimed they had uncovered the true identity of Satoshi Nakamoto, outing a California man by the name of Dorian Nakamoto as the man behind the alias. If that name doesn't ring a bell, he is that Japanese-American man whose face is often used as, quote-unquote, the CEO of Bitcoin in so many memes. Well, as they say, history doesn't repeat, but it rhymes. We're going to get into all of that and more in just a minute, and of course, we will get into our DCA Wednesday stack. But before we do, let's take a customary look at Bitcoin's vital statistics. At the time of this recording, we are sitting at a block height of 864,012. Of course, it is a day late. When we did our DCA Wednesday stack, we were at a block height of 863,846. But we are a day later than usual today. And if you were following me on Twitter, you knew that was going to be the case. Bitcoin's current price means that we will receive 1,646 sats per dollar, and that's about the same as yesterday. Yesterday was we stacked in the 1,655 sat per dollar range. Bitcoin's current price gives it a market capitalization of 120, wouldn't that be nice? 1.2 trillion US dollars, approximately the same as last DCA Wednesday, the last two DCA Wednesdays, when we were in the lower range of the 120. I have $120 trillion stuck on my mind. $120 trillion would be 100x where Bitcoin currently is. And while that is not out of the realm of possibilities, while I believe that will certainly happen in most of our lifetimes, I'm getting way ahead of myself. In the last several episodes, Bitcoin has been in the lower 1.2 to 1.24 trillion dollar range, so still pretty consistent with where we have been kind of in this crab market ever since we came back down from the premature all-time high after the spot Bitcoin ETF approval. Above all, it's above the $1 trillion mark, that magic number that I think human psychology uh, latches onto as a significant milestone. There isn't much difference between a $999 billion asset and a $1 trillion asset. But as I've spoken about in multiple episodes, there's just something about those nice round numbers. And $1 trillion is that nice round number that human psychology says, no, this is a serious asset. This is no longer just magic internet money. This is something that we at least need to take seriously. And currently we're at $1.2 trillion market capitalization. For those of you who continue to value your wealth in shiny yellow rocks, it will currently cost you 22.7 ounces of gold to purchase just one Bitcoin. 22.7 full 1 ounce coins or shiny Spanish doubloons. For those of you who value your wealth in pizza, one Bitcoin would purchase you 3,397 large pepperoni pizzas from Papa John's, a pizza every day for more than 9.3 years. And that metric that has been my favorite for most of this podcast, Bitcoin's 24-hour average transaction rate, is ringing in at an average of 6.69 transactions per second. And while the price is down, and that is actually up from last DCA Wednesday, so that deviates from that trend that we'd usually seen while we've been doing this podcast, there has been a significant increase in on-chain activity, and some of that I think has been related to maybe there was some activity on chain from somebody consolidating some old BRC20 tokens, or attempting to consolidate some BRC20 tokens. There was a lot of activity that was tied to one specific address, and most of those were believed to be meme coins or spam coins or ordinals or inscriptions or something along those lines. And I didn't put that story in my notes because we have a lot else to talk about, and that's why I'm kind of fumbling here on whether it was BRC20 tokens or ordinals and inscriptions. But you get the point. It was spam. It wasn't actual legitimate on-chain Bitcoin transactions. Speaking of that on-chain activity, the mempools are looking significantly more full than they were last DCA Wednesday. Clark Moody's mempool, for example, has almost double the number of transactions that it did last DCA Wednesday, with 137,414 transactions in their mempool. And Mempools.Space's mempool is up by about 15,000 transactions to 146,179 transactions. So again, that accounts for a lot of that increase in activity. Along those lines, if you need to send an on-chain transaction, Clark Moody's dashboard is recommending a fee of 5 sats per VByte for a high priority transaction, up from 3 sats per VByte last Wednesday. Of course, the fee estimator is remaining the same as last week for a lower priority transaction. If you have either a day or a week, up to a week to wait, they're recommending a fee of 2 sats per VByte. Mempool.Space is recommending a slightly higher fee than they were last week. Last week, they were saying a fee of 2 sats per VByte should be included regardless of the priority of your transaction. And this week, they still have all fees recommended, the same fee that they recommend for a high priority transaction, even if it's a medium, low, or no priority transaction. But that's up to 3 sats per VByte from 2 sats per VByte last week. And that works out to about 26 cents in US dollar terms for that on-chain transaction for an average transaction. And that's still pretty cheap, especially for a high priority transaction. Since last DCA Wednesday, we have gotten a little bit closer to the next mining difficulty adjustment. It's looking like that's going to happen on October 9th, so about 6 days away. That works out to we're about 850 blocks away. We're exactly 850 blocks away from that next mining difficulty adjustment. So we're getting a little closer, about a week to go now. And so it's a little more likely that we have some good data, but depending where you get that data, it's looking like it's going to be a small increase of anywhere from 0.1 to 0.92%. And that's actually surprising because we have seen transactions slow down a little bit. Last week, we were looking for last week we were looking for anywhere between a 0.1 and a 10.2% increase because we were just so close to the last difficulty adjustment that we didn't have enough data to get a good average. But currently, at this moment in time, blocks are averaging exactly 10 minutes between blocks, which is exactly what the Bitcoin Core protocol is aiming for. So if that were the case, it would be a no difficulty adjustment. But I guess the two different data sources are taking into account the trend, and the trend has been increasing. For example, last Wednesday, transactions were averaging 9 minutes and 28 seconds, which is significantly faster than 10 minutes. And so while they've slowed down, I guess it would be assuming that slowdown would continue, and therefore the 0.1 to 0.92% increase that's forecast for next October 9th. And that is because it looks like we have seen the amount of mining power securing the network increase from last week's 628.4 exahash to an estimated 633.2 exahash. A relatively small percent, but about 5 full exahash, and an exahash is a heck of a lot of computing power. So if that continues, maybe we'll see even a larger than the 0.92% difficulty increase. But again, that's only super important if you're mining at home or if you're a part of a large commercial miner, because again, that average transaction time is an average of 2016 blocks. So if you are just making a transaction, if you're waiting for a transaction to be confirmed, any random transaction could take anywhere from a few seconds to an hour or so. That's just the nature of the beast, and that's why Satoshi was brilliant enough to take an average of 2016 blocks to determine whether the difficulty should be increased, decreased, or remain the same. Real quick, I want to take a minute to thank those of you listening on your favorite Podcasting 2.0 apps, such as Fountain. Podcasting 2.0 allows you to support this podcast through the value for value method by either streaming sats on a per minute basis, kind of a set it and forget it, as you listen, or by sending a boost, which is a shout out via a Lightning transaction where you can let us know what you think about the podcast, let us know what's going on in your community, or even just say hello. But because it is a Lightning transaction, you are sending value back in the form of Satoshis. You can also earn Satoshis just for listening on Fountain. So why wouldn't you listen on Fountain instead of the big tech apps? We do not have any boosts to read this week, but thank you to those of you who have been supporting the podcast, who choose to do so from time to time. And thank you to everyone who's listening, regardless of whether you're listening via Podcasting 2.0 or not. Our geographic distribution of listeners has had a little bit of a change for the first time in about 3 months. As usual, the top 10 countries are led by the United States, where 62% of you are listening. So thank you to those of you listening right here in the United States. If you're listening in the Southeast and portions of the country that were affected by Hurricane Helene, you have my sympathies, and hopefully everything gets back to normal for you as quickly as possible. Number 2 remains Argentina. So hola, muchas gracias, amigos, listening in Argentina. Number 3 remains Germany. So Dankeschön, mein friends in Deutschland. Number 4 remains Canada. So hello to those of you up north of us, north of the United States, in the hopefully not too chilly, frozen Great White North. Number 5 remains Luxembourg. So guten Abend, mein friends in Luxembourg. Danke für alles, or Morgen to those of you who speak Luxembourgish. Number 6 remains Spain. So hola, muchas gracias, amigos in Spain. Here's the change. Number 7 is Singapore. I'm told there are multiple official languages in Singapore, including Chinese and English, but the traditional language, in their traditional Singaporean language, I guess I'm told the traditional greeting is Apa kabar. So Apa kabar to those of you listening in Singapore. Number 8 is now Colombia, which has moved down one space from number 7. So hola, muchas gracias, amigos in Colombia. Mexico is now number 9, one space down from number 8, where they were last week. So hola, muchas gracias, amigos in Mexico. And Australia has moved down one space to number 10. So hello, good day to our friends in Australia. And that bumps the United Kingdom out of the top 10, but they're still lurking down there at number 11. So if you are listening from the United Kingdom and you want to reclaim your space in the top 10, you need to maybe ask a friend or a family member to listen to this podcast, because you're clinging on down there at number 11. Ooh, so close, just barely out of the top 10. But welcome to all of you listening in Singapore. Not only did Singapore break into the top 10, they did so in style, blasting all the way up to the number 7 spot, which is not too shabby considering we didn't even see them, lurking down at number 11 last week. So what a surprise. So welcome again to all of you listening from Singapore. And welcome to all of you, regardless of where you're listening, because we do have listeners all over the world. It isn't just the top 10. It's just, I like to recognize the top 10 every week because it is pretty cool to know where most of the people listening to this podcast are listening from. On to the news. As often is the case, once again, the news is the price and the price is the news. CNBC ran the headline, Bitcoin tumbles back to the $60,000 level as tensions in the Middle East heighten. Cryptocurrency slid Tuesday night with Bitcoin dropping back to $60,000. The cryptocurrency had a shaky start to the shaky kickoff to what is usually one of its strongest months. As you know, allegedly Iran lobbed hundreds of missiles into Israel the other day, and as a result, or actually even when the United States first said that it was imminent, that they had signals to believe that was going to happen, that led to markets around the world tanking, the price of gold, liquid gold, black gold soaring, the price of oil and natural gas going through the roof as people are worried that we're maybe sliding one step closer to a global conflict. Part of the reason for the large slide above and beyond the initial panic, of course, are all those liquidations. Decrypt running a headline just a few hours ago saying Bitcoin liquidations top $500 million after sharp market correction. So basically what happens is people panic sell, and then because of the panic selling, those of you who are trading on leverage, taking out shorts, etc., get absolutely wrecked when your positions are completely liquidated, and this time to the tune of more than $500 million US dollars worth of shorts, or worth of longs, I suppose would be in this case, worth of leverage trading. As I emphasized at the beginning of this show, I believe this halving cycle bull run has yet to even get warmed up, and I'm obviously not the only one who believes this. For example, Watcher Guru ran the headline today, Standard Chartered, Bitcoin under 60K is a buying opportunity. In a recent note, Standard Chartered Bank has urged that Bitcoin falling below the $60,000 mark is a clear buying opportunity for investors. Indeed, the bank noted that the leading crypto is a clear hedge against economic crisis. Who is Standard Chartered? You may be asking if you're not familiar. According to Wikipedia, Standard Chartered PLC is a British multinational bank with operations in consumer, corporate, and investment banking and treasury services. Despite being headquartered in the United Kingdom, however, it does not conduct retail banking in the UK, and around 90% of its profits come from Asia, Africa, and the Middle East. Standard Chartered has a primary listing on the London Stock Exchange and is a constituent of the FTSE 100 index. The name Standard Chartered comes from the names of the two banks that merged in 1969 to create it. The Chartered Bank of India, Australia, and China, and the Standard Bank of British South Africa. Again, I have often reminded you that any price below the previous cycle all-time high is a prime buying opportunity, and that the amount of time we remain there is not a given, although, as I emphasize that traditionally we don't retake that previous all-time high till 6 months to a year after the halving. You never know what's going to happen, but that once we do, we get on that face melting bull run, and that we usually never see the previous cycle's all-time high again. Although we broke that rule when we briefly went below that this time in the previous cycle, so that's not necessarily written in stone anymore. But even if we do retrace back below the previous cycle's all-time high, that was shortly lived. It was a matter of days, and think about how long we were at the $15,000-$16,000 range just a year or so ago. More than a year ago, I guess, but it wasn't very long, and not too many people were fortunate enough to buy in unless you already had, a limit order set up, keeping your fingers crossed on the hopes that might have happened. Another important thing to keep in mind, to keep in perspective, is despite the selling in general, BlackRock has been adding to their holdings. Today's numbers aren't in yet, but Tuesday, despite the massive sell-off, BlackRock actually added $40.8 million worth of Bitcoin to their holdings. Yesterday, BlackRock did post one of their very few outflow days that they've had since their inception, but that was only 13.7 million in outflows, still leaving them up significantly for the week and with more than $21.5 billion worth of Bitcoin in general. So as a reminder, please do not sell your Bitcoin to BlackRock. Wall Street is buying vastly more Bitcoin than is being mined right now. And the only way for them to do that is to shake it from weak hands, shake it from the hands of the people who panic sold. And once Wall Street sucks that Bitcoin, into their greedy little hands, the chances of it ever being available for plebs to use as Bitcoin was intended or to add to your stash is pretty slim. Speaking of fiat world, yesterday it was reported the Federal Reserve posted a record loss of $114 billion in 2023. They had been posting in 2021, I guess 2022, the end of 2022, they started to slide into a loss. But prior to that, their profits had been ranging between $50 and $100 billion every year going back as far as 2014. So let the money printer go burr. It's written in the stars that die is cast anyway. Obviously, the United States has no choice but to try and print their way to devalue their currency out of their horrific trillions of dollars of debt and deficit. Larry Lepard posted back in a week ago now, nobody alive today has ever seen what we are about to go through in global markets. Nobody. That is the tweet. History books are your best guide. I alluded to this in the intro, but in the category of here we go again, it is being reported that an HBO documentary is poised to reveal the identity of Satoshi Nakamoto. Politico ran the headline, Mystery Creator of Bitcoin Identified, New HBO Documentary Claims. Many in the Bitcoin community reject attempts to identify Satoshi Nakamoto, arguing the importance of his right to privacy. That's kind of a misnomer. I don't ever argue that he has a right to privacy. I argue that it really doesn't matter. And I think most plebs argue that it doesn't matter who created Bitcoin. In fact, maybe it's better that we never know. It adds to that whole immaculate conception thing. I don't think I've ever actually heard anyone argue, he deserves his privacy, leave him alone. The article continues, the revelation could send shockwaves through the cryptocurrency markets and beyond. A new HBO documentary claims to have cracked the true identity of pseudonymous creator of Bitcoin, Satoshi Nakamoto. If its findings are widely accepted, the disclosure could send shockwaves through world financial markets and even the U.S. presidential election, given the way Republican candidate and former President Donald Trump has cultivated the support of Bitcoin enthusiasts. The documentary is the latest work of Emmy-nominated Colleen Hoback, who drew critical acclaim for her series Q Into the Storm that exposed the authors of the QAnon conspiracy theory. The big reveal is set to air next Wednesday at 9 p.m. Eastern Time, 2 a.m. Next Tuesday at 9 p.m. Eastern Time, Wednesday at 2 a.m. CET for those of you in Europe. Hodlanot on Twitter had an amusing post about this. Hello, HBO, or hey, HBO, why create a whole documentary when a simple flowchart tells the story? And the flowchart starts out, who is Satoshi? And goes down to, are you Craig Wright? Yes. Everyone is Satoshi except you. Are you Craig Wright? No. We are all Satoshi except Craig Wright. Again, I pointed out that Newsweek in 2014 thought they had the scoop exposing the California, actually not too distant neighbor from Hal Finney, Dorian Nakamoto, who is obviously not Satoshi Nakamoto. In fact, there were multiple reasons why there should have been a big red sign to them that they were onto the wrong guy. But it did give us those memes, all those memes of the photo of the Japanese American with the kind of the dour look with the stiff upper, the stiffened lower lip. That was, of course, Dorian Nakamoto. And we all certainly know who is not Satoshi, as Hodlanot referenced in his tweet, and that would be CSW. Although it's kind of sad in some ways that this documentary is coming out after Copa put the smackdown on CSW, because It'd be fun to watch him squirm and try and say, no, over here, me. I'm Satoshi. It's me. I'm Satoshi. HBO, you're sucking up all my attention. So anyway, on to one amusing note before we get into this DCA Wednesday stack, and this is freaking hysterical. Uh, it's once again a reminder that the power of the meme, the power of chicanery, can overcome the power of tyranny, and it's just glorious. And a little bit of background: if you remember that as of October 1st, it became illegal to own a chicken in England without registering that chicken, without feeding into that stereotype. Oh, you got a license for that chicken, mate. So Blame Game tweeted October 1st. So all the people who tried to register their roast chickens from Tesco have managed to crash the DEFRA website, and it's now not working. It's not big or clever. Stop snickering. Apparently, people were going to the grocery store and buying roast chickens or rotisserie chickens and filling out the license applications online and crash that website. And that is just amusing. In the spirit of our cousins across the pond, I salute you. All right, on to what made yesterday and every Wednesday so special. And that is that yesterday was our DCA Wednesday episode where we grow our stack of Satoshis. And if you're following on Twitter, you knew that I had some things come up that I was unable to record this podcast yesterday. So we're coming to you a day late. But of course, as always, I did make that DCA Wednesday stack on time. We just didn't get the podcast out. And if you're listening to me talk about this, but you don't know what DCA means, well, DCA is short for dollar cost averaging, and dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. The whole mantra that time in the markets beats timing the markets. And so along those lines, our equal portion is that we chose $20 because I wanted to keep it simple. I wanted to use an amount that almost anybody listening to this podcast should be able to come up with. And our regular interval, of course, we chose weekly, once a week, weekly on Wednesdays. And so along those lines, we have stacked 100, or we had stacked 166 times, converting a total of 3,320 US dollars, just $20 at a whack, into a stack of 9,936,190 sats at an average purchase price of $33,413.21. Yesterday, of course, we purchased another 20 US dollars worth of Bitcoin. We did so at a purchase price of $60,375. So just a little bit cheaper than what Bitcoin's currently valued at while we're recording. That purchased us an additional 32,381 sats, which brings our stack up to now 9,968,571 sats. Potentially just one more DCA Wednesday from crossing that 10,000 sat mark, which is currently our unofficial stacking goal for the DCA Wednesday series. Just like any other pleb out there, we've changed that goal multiple times. When we got over 5,000 sats, the goal kind of unofficially became 10 million sats. I'm sorry, we got over 5 million sats. That goal became a 10 million sats. Of course, we're going to keep stacking even after we have succeeded in stacking more than 10 million sats. And I guess we'll have to figure out what our new goal is going to be after that. Just like most people, like years ago, it was more common for everyone to have a one whole Bitcoin goal. Now that Bitcoin's so expensive, one Bitcoin is unattainable for a lot of people. So maybe your goal is a tenth of a Bitcoin or a quarter of a Bitcoin or whatever your personal goal is. But once you achieve that goal, then you obviously don't stop stacking. You reset that goal. So back in the day, after you got your first Bitcoin, maybe your goal would be now to become 2 Bitcoins. And after that, maybe 5 Bitcoins. So maybe now your goal is a tenth of a Bitcoin, and then it'll be a quarter of a Bitcoin, then a half a Bitcoin, then 3/4 of a Bitcoin, and then a Bitcoin. My point being, it's a sliding scale, but it's fun to achieve those goals and then to push yourself or your goals to newer highs. By purchasing at $60,375, that did raise our average purchase price by another $92.09. So now our average purchase price is $33,505.30. I'm a numbers guy, so I see 505 in that number, and that reminds me of the area code that used to be the area code for all of New Mexico. and I'm a big fan of Hatch green chili. And the Hatch Valley in New Mexico now has a different area code, but for the longest time it was area code 505. And one of the brands of green chili I was able to get here in Florida was 505 brand chili. I think 505 is basically now only Albuquerque, and the rest of the state has a different area code, but that's kind of a tangent. But as you know, I'm a numbers guy, and a lot of you listening probably are too. That's one of the things about Bitcoin, that it attracts people that are mathematically and numerically oriented. All right, so before I wrap this up, I want to reach out to those of you listening and ask you to help support this podcast, and to do so by feeding that algorithm monster. Of course, the fastest way you can do so is by rating or reviewing this podcast. There are various ways to do that depending on which podcasting platform you're listening to. Of course, just making sure you subscribe to this podcast is the easiest way, if you that you can help support this podcast. And I have noticed in the past that I have been unsubscribed from podcasts that I listen to, and we spoke about how Apple Podcast, if you're listening on Apple Podcast, has started unsubscribing people that don't listen to more than 2 podcasts a week on average. So it's distinctly possible, even if you've been a long-time loyal listener, that you're not actually subscribed anymore on Apple Podcasts. So if you'd go back and make sure you are subscribed on Apple Podcasts, that is one of those ways to help feed that algorithm monster, to keep that algorithm monster satisfied anyway, nonetheless. It also really helps if you're following us on Twitter. And along those lines, on Twitter or X, we are at BTC Bulletin Pod. That's at BTC Bulletin Pod on Twitter. Of course, you can also support the podcast through the value for value model if you're listening on Fountain or another value for value podcasting 2.0 app such as Breeze. But besides just supporting the podcast, I also like to hear from you. It's really cool when we go over our top 10 countries to visualize where all of you are listening to, or at least the majority of you are listening from. But the reason that I like these boosts is because it helps put a name, or at least a NIM, with the listeners, with those statistics. But you don't have to support the podcast financially to do that, to help fulfill that vision. You can also reach out and just send me a simple DM via Twitter, again, at BTC Bulletin Pod, or even an email. Our email is bitcoinbulletin@protonmail.com. I check that email usually more than once a day. Sometimes I might go a day without checking, but I definitely check it before I record the episode. In fact, I have my Proton Mail open right now. So again, send me a DM. Let me know what you think about the podcast on Twitter or X at BTC Bulletin Pod, or send me an email at bitcoinbulletin@protonmail.com. All right, I know this episode has been short but sweet, but I wanted to make sure that we covered the most important news of the day, and that we went over that DCA Wednesday stack before it got much later, since we're already coming to you a day late. Hopefully we'll be back on schedule next Wednesday, and we'll get that DCA Wednesday stack done in real time instead of a day late. I do apologize for that, and thank you for your forgiveness and your continued listenership. Either way, don't forget to tune in next Wednesday and every Wednesday while we continue growing that stack together, hopefully to 10 million Satoshis or more, as long as people are willing to trade us Bitcoin for worthless paper fiat. But either way, until that time, keep on stacking those sats, you sexy sat stackers.